Good evening, everyone. Welcome to the official YouTube channel of Office Saturday 24/7. So before starting the session, first let me know, is audio, video both are okay? Are we good to go? So let me know first, is audio and video both are okay? Are we good to go? So this is our victory series that we have started at 7 p.m. and every day we are discussing certain number of questions from an individual unit of your module D. So we have started from module D here, and if you talk about module D, you will find here that module D have a biggest syllabus in the IFS, and the reason behind it, because a lot of units are there and the units cover a lot of questions there. Okay, that's why we can say that we have maximum number of questions or maximum number of topics available in your module D. So that's why we have started the victory series from the module D. Okay, and right now if we talk about today's session, this is our class number 9. It means already 9 session we have conducted in your victory series. Actually, the regular timing of this class is 7 p.m. Okay, because you guys know today it was a webinar at 7 p.m. That's why we have changed the timing of the class, and we are having this class at 8:30 p.m. today. Otherwise, it will continue go at 7 p.m. only on Office Saturday 24/7, Monday to Saturday. Now, next thing is that this is our class number 9th, you can see. So in the victory series, we have started Indian economy, Indian financial system from your module D. Okay, and module D unit number 37 we are going to discuss today. That's your factoring and forfeiting and the trade receivables discounting system. So in the module D, we have completed financial market, money market, capital market, fixed income market, foreign exchange market, interconnectedness of these market, merchant banking and derivative market. All these have been completed, and today we are going to cover the factoring, forfeiting and TReDS. Okay. So before moving forward, if you haven't seen the earlier session, what you have to do, simply go to the official YouTube channel of Office Saturday 24/7, go to the playlist. In playlist, you will find all the sessions recording available, so you can watch it whenever you want. Okay. So now let's start with the factoring, forfeiting. Let's first have an understanding of this chapter, and then we will practice certain number of questions. So first of all, it is talking about factoring, forfeiting and TReDS. They all are similar in a certain way. Okay, when it comes to the factoring, what happens in the factoring, there will be a certain party. Let's say one will be your seller, one will be your buyer, and one mediator will be there, that will be known as a factor. One mediator will be there, that mediator will known as what? It will be known as a factor. So what happened? The seller and buyer have a contract among them, and the seller have done the shipment of goods. The seller has sent the goods to the buyer. Let's say shipment of goods have been done. Now it's the responsibility of the buyer to make payment to the seller. Now what happened? Buyer has given the seller the certain invoice in which it is saying that your payment will be done on 26th of March. That's a future date have been given. So the first transaction happened, that the seller done the shipment of goods to buyer, and then the second mechanism, in the second step, the buyer have given the receivables, the trade bill, or I can say the invoice to the seller, which says that the payment will be done on 26th of March. Now, but the seller needs an immediate payment because the seller have to start the another project, the another contract. Okay. So in that situation, seller in the third step will go to the factor. Okay, and will give that invoice to the factor and will ask immediate cash from the factor. Here the factor can be any bank of your or any financial institution can become the factor. Now after checking the invoice, factor will also check the credit worthiness of buyer, because in the end the factor is going to recover the money from the buyer. So after checking the credit worthiness, the next step is that the buyer will return the money. The factor will give, in the fourth step, will provide the immediate cash to seller. Okay, now when the due date comes, let's say due date is 26th of March. So when the due date comes, in the fifth step, factor will go to the buyer and will ask about the payment. Okay, and here in the sixth step, what will happen? The buyer will make the payment to the factor, okay, of the invoice, and the last step will be the remaining payment will be done or remaining amount will be sent by factor to the seller. This is what the factoring is. Okay, all the mechanism I have defined here, it is factoring. Factoring means when the seller goes to the bank and asks for an immediate cash. Okay, when we are talking about when a particular customer goes to the bank and asks for an immediate cash on behalf of the invoice of the trade, in that situation, bank make it possible for the seller, for the client, that the client will have a maximum capital available to start the new contract or start the new business. Okay, and it was actually introduced by RBI to make sure that more and more bills culture will be introduced in the country and more fluctuation of currencies will be done, or I can say flow of currency will continue in the economy. Okay, this is your factoring. Now, when it comes to the forfeiting, the same thing is there. Okay, in case of your forfeiting, what difference you will find here? Like in case of seller, you will have an exporter here. In forfeiting, you will find in place of seller, you will find exporter. In place of buyer, you will find importer. It means forfeiting is your what? It is your international forfeiting. It means with the another country you are performing the trade. Okay. Now the factor will known as here forfeiter. The factor will known as what? Forfeiter. So forfeiting is simply when in the international trade, when in the export and import of goods and services, banks provide immediate cash to the exporter on behalf of the trade bill. That is known as forfeiting. Okay. Exporter, importer and forfeiter will be there. So we have discussed what is factoring, we have discussed what is forfeiting. Okay, both are same, only difference is there related to the trade. And the next third one we have is TReDS. Now when it comes to TReDS, it's actually a form of factoring. What is TReDS? TReDS is a form of factoring and it is available only for micro, small and medium enterprises. Okay, TReDS is only for what? It is only for a form of factoring and will be available to micro, small and medium enterprises only. So in the factoring and forfeiting and in TReDS, what we are actually doing? We are providing immediate cash available to the seller, to the exporter or to the MSME so that they will be able to continue their business, to start new contract, to start new agreement and will have a proper cash flow available so that the new business can be started. Okay, or the new contract can be started. So only difference is there. In factoring, it will happen domestically. It can be international, but there is certain exceptional cases. And the forfeiting will always be international. And the TReDS will only be for the MSME. This is the only difference among the three. Okay, this is the only difference among the three. इस एग्जाम के लिए कोई भी अप्लाई कर सकता है. एनी मैम, इफ यू अगर आप इस एग्जाम के लिए अप्लाई करना चाहते हो तो यू कैन गो फॉर द डीबीएफ. डीबीएफ के लिए कोई भी अप्लाई कर सकता है. ठीक है, टू गेट द नॉलेज ऑफ अ बैंकिंग. दिस इज नॉट अ हिंदी मीडियम सेशन. ये आपका हिंदी मीडियम सेशन नहीं है, ये इंग्लिश मीडियम सेशन है. इफ़ यू वॉन्ट टू ज्वाइन हिंदी मीडियम सेशन, अगर आपको हिंदी मीडियम सेशन ज्वाइन करना है तो मॉर्निंग में होता है 7:30 AM Monday to Saturday. Okay, that's a Hindi medium session. Okay, let's continue. So this is what the factoring, forfeiting and trade receivable discounting system we have. Now let's start and discuss in form of MCQ the same chapter. So the first question is talking about your factoring. Which of the following are correct about the factoring? So the certain statement have been given to us and they are asking which of the following is correct. First is saying factoring is an arrangement for financing a company's business against invoice raised on its buyers and in which the factor is responsible for credit control, sales, ledger administration and collection activities. Okay, that's the first statement. Second is talking about in full service factoring, the factor bears losses if the buyer fails to pay. Okay. The third is saying the factoring is an arrangement for management of receivables, maintaining the sales of receivable ledgers, submitting sales account, collection of debt. So out of these three statements, what do you think which of the following is correct about the factoring? So factoring is actually a facility that bank provide to the customers or to its sellers or to its clients so that they will be getting the easy credit facility to continue their business or to continue their new contracts. Apart from that, it also helps in credit control, in sales ledger administration, and in the collection activities as well. So the first one is correct. Second is saying in full service factoring, the factor bears the losses if the buyer fails to pay. Let's say on the due date, when bank went to the buyer and asking for a payment, at that time the buyer refuses to make the payment and the buyer defaults. In that situation, if you have a full service factoring, that's a type of factoring. If you have a full service factoring, then the factor bears the loss. It means the bank bears the loss if buyer is not going to pay. Clear? So this is also true. Third is saying that factoring is an arrangement for the management of receivable, maintaining the sales or receivable ledgers. It submits the sales account, collection of debt. Everything is correct regarding the factoring here. Okay, receivable means the trade bills, or we can call it an invoice that have been given by buyer to the seller, which says that the payment will be done in the future. Okay, now the next question. So right answer will be your D. Right answer we have is D. All are correct. Second question is talking about there are two types of factoring services, dash and dash. So factoring have two types. One of the types says that if the buyer defaults, the seller have to give back the money to the factor. And the second says if the buyer defaults, the bank or the factor, we can say, have to bear the loss. So there are two types of factoring that you have to answer which of the following is correct. So do remember, in one type of factoring you will find that the seller have to return the money to the factor, and the another type of factoring will says that the bank have to face the loss. The seller do not have to repay the money. And the right answer here will be recourse, non-recourse, direct, indirect, with recourse, without recourse, both A and C. So what do you think? Which of the following is correct in context to your factoring? A, B, C or D? So actually the right answer will be your D. Right answer is what? It is D. Both A and C. You can call it recourse or you can call it with recourse. The non-recourse is also known as a without recourse. So they are the other name. Okay. They are the other name of each other. So when it comes to the recourse factoring, it means with recourse. When it comes to the non-recourse factoring, it means without recourse. Okay. So right answer will be your D. A and C is correct here. Right answer will be your D. Clear? Next question. Next we have here, which of the following are correct about the advantages of factoring? The correct statement about the advantages of your factoring. So you have to find out the correct. So what is the benefit of advantage? The first benefit is that you will get cash whenever you want. Easily it will be available to you. Okay, so first is saying factory replaces the high cost market credit and enable purchases on cash basis for availing the cash discount. This is true. It actually helps you to get the capital with the less costing of the market. Now, the customer gets instant finance against invoice. Okay, that's also true. I have just told you, you have to give the invoice and you will get the cash, immediate cash. Low margin, that is up to 20%, thereby improving the cash flow also. Low margin means what? Means in the factoring, whatever your amount of invoices, of that invoice, 75 to 80% amount will be given to you in immediate case. Okay, let's say if my invoice is of 100 rupee, then I will be getting 75 to 80 rupees immediately from the bank. Okay, and bank will have margin of 20% only, that is 20 rupees in case of our example. So 20% low margin will be there. Okay, so more cash flow will be there out of your invoice value. Next, the customer gets large credit grace period. Next we have what? The customer gets large credit or grace period. That is true. You will get a grace period of 60 days as well. Okay, now next we have each invoice is followed up for payment by the factor on the due date and thereafter. So it's very true. I like the seller do not have to go to the buyer on the due date. It is the responsibility of a factor now. On the due date, the back factor will go to the buyer and ask for a payment. So that's responsibility is not of a seller. It means all the statements or all the benefits are true or advantages are true about the factoring here. Okay, so your right answer will be all of the above, that is D. Right answer will be all of the above, that is 3. Okay, next question. It is asking about which of the following is are correct about forfeiting. Now the next term we have is forfeiting, and which statement is true about forfeiting, that you have to answer. So first is saying here, forfeiting can be defined as financing exports by discounting export receivables, evidenced by bills of exchange or promissory note carrying medium to long-term maturity. Okay. Second is saying it provide on fixed rate basis, like known as discount up to 100% of the invoice. Third is saying when an exporter transfer his right to receive payment in favor of the forfeiter, the transaction is called forfeiting. Okay. Next we have forfeit is derived from the Greek word that is forfeit, which means surrendering of the rights. And you have to answer which of the following statement about forfeiting is actually incorrect. Not correct, we have to find out the incorrect statement. Okay, which of the following statement is incorrect about the forfeiting? A, B, C or D? So the first one is very much correct, like you are financing the export by taking the trade bills or the invoice of the contract. You are taking that contract invoice and you are providing immediate cash to the exporter. That is true. It provides fixed rate basis up to 100%. Like in factoring, we have discussed 75 to 80% immediate cash will be available. But in forfeiting, you will get 100% cash available. So this is also true. When exporter transfer his right to receive payment in favor of the forfeiter, the transaction is called forfeiting. That is also true. Forfeit is derived from a Greek word. No, actually it is derived from a French word. And that word is your forfeit. Which means what? Which means surrendering of rights. So the right answer will be here. All except 4 are. Acha. It is asking about correct statement. Acha, okay, theek hai. So the right answer will be all except 4. Only the fourth one is not correct. All the rest are correct. So right answer will be your C. So question is asking which of the following is are correct about forfeiting. All are correct except the fourth statement, because it's not a Greek word, it's a French word. Okay, so a minor changes can be done in the statement. So we have to very clearly find out which statement is true or which statement is false. So your right answer will be here. C, all except 4 are correct, but the fourth statement is incorrect. Now, next question we have about TReDS. So which of the following is our incorrect criteria for entities desirous of setting up the operating TReDS? So TReDS is a type of factoring only. Na? TReDS is what? It's a type of factoring. But in TReDS, you will find it will be only for MSME. Like in the factoring, what we are talking about, bank will provide the immediate cash on your invoice to the seller for the purpose of further transaction or further start its own next contract or agreement, etc. So seller gets here immediate cash while the seller shows the bank the invoice of the trade. Now, in case of TReDS, the seller will only be your MSME. Okay. In case of TReDS, the seller is only your what? MSME. So, since TReDS will not be allowed to assume any credit risk, the entity's minimum paid up equity capital shall be 25 crore. Second, the foreign shareholding in TReDS would be as per the extent foreign investment policy. Third, entities other than promoters will not be permitted to have shareholding in excess of 20% of the equity capital of TReDS. Fourth, the overall financial strength of the promoters or entities seeking to set up TReDS would be an important criterion of assessment and selection. So out of these, you have to answer which of the following is actually not correct. A, B, C or D. And the right answer here will be all are correct, but not the third statement. Because if you talk about shareholding in excess of 20% of equity capital, it is not 20%, it is 10%. So the right answer is third is wrong. So right answer will be your D. Only third is incorrect. All the other are correct. So right answer will be D, only third is incorrect. And the wrong thing in the third statement is, it is talking about 20% of equity capital of TReDS. No, it is 10% of equity capital of TReDS. Okay, so do remember, each and every statement is giving you a certain information about the concept related to the topic. So in form of question, you are reading or you are revising or you are understanding the actual term which is asked here. Okay. Now, next question is filling the blanks about TReDS. Okay, and we have how many how many blanks? 1, 2, 3, and 4. 4 blanks we have. Okay, so first is asking about TReDS is a scheme for setting up and operating the institutional mechanism for facilitating financing of trade receivables of dash from corporate other borrowers including government departments, public sector undertaking through multiple financiers. So we are saying that TReDS, it's what? It is a scheme. It's a scheme that have been set up operating institutional mechanism. Okay, which do what? Which facilitate financing of trade receivable of dash. From whom? From corporate buyers, etc., etc. So all these parties have purchased the goods from the certain entity that you have to answer here. On behalf of that trade, the party can take the immediate cash that is known as your TReDS. And that party will be what? MSME, SME or MSME. So obviously it is a MSME. So you can simply eliminate the B option. So when the micro, small, medium enterprises are selling their goods to any of these parties, and these parties have been given them invoice or trade bill which says that the payment of the trade will be done in the future. In that situation, what happened here? The MSME can take the immediate cash facility here. Okay, the next is talking about it is a form of dash. So it is a form of what? Factoring or forfeiting. So I have just told you it's a form of factoring. So it means you can eliminate the option number C as well. Okay, now you have option number A and D, and the D option saying none of the above. It means we have to go through whole question. Okay, now we are talking about to address the financing related issue faced by MSME in India, RBI in the year dash introduced the concept of TReDS. So when the TReDS was introduced, it was actually introduced in 2014. It means first, second, third, these 3 blanks is option is correct here. Now, then a mechanism of trade receivable financing for MSME on a secure digital platform. It may be stated that the TReDS facilitates the discounting of both invoices as well as bills of exchange. Further, as underlying entities are the same, MSME and corporate and other buyers including government department and PSUs, TReDS could deal with both receivables factoring as well as reverse factoring so that higher transaction volume come into the system and facilitate better pricing. The next thing is the transaction proceeds under TReDS will be dashed to the MSME. Will be what? To the MSME. And if you are getting a protection here, it means it's a without recourse facility. So your right answer will be A. So TReDS is for MSME. It's a form of your factoring. It was introduced by RBI in 2014 and the transaction proceeds under the TReDS will be your without recourse. Without recourse means here if somehow buyer defaults, the factor have to face the loss, not the seller. Okay, that's what it is talking about. So the right answer will be your A option. Right answer here will be A option. Clear? Next question is talking about here. The following are the advantages of forfeiting to the exporters. Okay, so the certain option have been given. First is saying forfeiting provide 100% financing. Second is saying forfeiting improves cash flows of the exporter. Third is saying forfeiting saves administration cost. And out of these, you have to answer which of the following is correct. Which of the following have been done by the your forfeiting advantages to the exporter? A, B, C or D? Okay. So here actually it provides 100% financing because it's a forfeiting. It improves cash flow for exporter. This is also true. Forfeiting saves administration cost. This is also true. So right answer will be your all of the above. The right answer will be your all of the above is correct, or all of the above are the advantages of your forfeiting. Okay, because it provides all these 3 benefits to the people, to the exporter actually. Next question is talking about TReDS has been introduced. TReDS has been introduced. By whom? By RBI, by SEBI or none of the above. So we have discussed that RBI introduced TReDS. It means you can eliminate the B option. Okay, and TReDS is for what? to look after the difficulties that MSME suppliers have experienced in obtaining payment from their bills drawn on large corporate. Third is saying by RBI for medium-term financing. No, the TReDS is for long-term financing actually, and the right answer will be your A option. The right answer is A. RBI have introduced for the MSMEs because they were facing problem from their customers. Now, next question we have, in the case of single factor system, which of the following is correct? So, first is saying there is no import factor, there is no export factor. The import factor comes into the picture when the buyer defaults in making the payment. Fourth is saying the export factor comes into the picture when the buyer defaults in making the payment. So, what happened? The factoring can also be done in your international level. And when it happens international level, it have three types. First is single factor system. Second is your export factor system. Third is you have import factor system. So, these three types of systems are there in case of international factoring. Okay. And we are talking about single factor system. It means there will be two factors, but only one factor will be active, and that will be your export factor. The import factor will only be active here in case of your buyer defaults on the due date. Okay, in case if the buyer defaults on the due date, then only the import factor become active in the payment, otherwise no. Otherwise, all the transaction will be taken care by your export factor. So, right answer here will be C option. Okay, next question we are talking about the maximum credit period normally permitted under the factoring is. So, factoring actually gives us the what? It actually gives us the grace period also. So, grace period will be of 60 days, but including 60 days, you will get 150 days for the period of your credit facility. So, actually it is 150 days for factoring, and for 150 days it also include your 60 days grace period. So, 90 days actually the credit facility is there, and 60 days will be your grace period. Okay, so right answer is your A. Now, this is the information I have, the paid class from 9 PM. So, I have to end quickly, but this is the information. AIM batch is already live, and your PPB RBWM is going on. IFS I am starting on 26th, and JAIIB Mahapack having a double validity plus 81% discount. If you want to enroll in any of these batches, you can enroll by using the code Y496. Here you will get 81% discount. And to enroll, you have to download the Adda 24/7 application. Benefits are available. You can go to the application and check the benefit. And to regularly join these sessions, do subscribe to the channel Officers Adda 24/7 and press the bell icon. Okay, so that's all for today. Now I have to quickly end the session. See you all in the next session. Do connect it with the channel Officers Adda 24/7, and do make sure you register yourself ASAP for the JAIIB paper. Okay, take care everyone. Have a good time.